Why do you need these indicators? I've seen professionals in other videos trade without them. Friends, I often get feedback from armchair experts saying that trading with indicators is totally outdated. They say it's bad form and that none of it works at all. It's already a thing of the past. I don't think that trading without indicators is impossible. It's absolutely possible, and in fact, that's where you should start. But indicator-based trading systems make our analysis much easier and give us a fuller picture of the market. If you've studied patterns and technical analysis, you can also reinforce your knowledge with indicators. But the viewers demand it, so we deliver. Today we'll trade without indicators on a clean chart. I'll tell you what patterns are, how they're formed, how to read them, and how to avoid mistakes when interpreting them. So make yourself comfortable and get ready to get the most out of this. Let's get started. Okay, right away I want to draw your attention to the fact that we're looking at a 30-minute chart here. The time frame will change today since we're specifically looking for patterns. And the first one, perhaps the most well-known, is the double top. It looks like two local highs that are close to each other. We also always highlight the dip between them. The straight line here is called the neckline. This is the most important part of the pattern because it's the crossing of this line that gives us the signal to buy or sell. I'll highlight it for myself with a straight line. This is our level and signal line. As you can see, right now we're dealing with a false breakout. Let's take a look at how this appears on lower time frames. We switch to the working minimum, 1 minute. And here, you see, we have a completely different picture. We can see that the break below the neckline twice resulted in a return back up. And that's exactly why I'm entering the market long. So, let's break down the situation once again. Here was an attempt to break through the neckline. Right after that, there was accordingly a second attempt. This indicates that there's a very juicy trade here and buyers are ready to buy in and push the price up. And you can see how immediately the asset confirms my analysis with a strong upward move. While we're waiting, I'll give you another tip on chart analysis. Ideally, you should always use larger time frames. On the 10-minute chart, it most likely shows a triple top, which is also called a head and shoulders pattern. This is basically an equivalent pattern with the same logic of breaking through the neckline. If we're working with minute charts, we often can't see macro patterns, but we can find smaller chart formations. They don't always play out, but they're still useful. It's worth noting that our first example today is very good, because for professionals, there's a rule. False breakouts are also a signal, and often an even more reliable one. Meanwhile, our first trade has closed and I immediately re-entered the market. Right now we're seeing a false breakout. Friends, it could very well be that classic double top. On the 30-minute chart, I ended up getting a third local high, which has now become a triple top for us. And now, let's try an analysis for the most patient of professionals working with the daily chart. Here is our maximum scale, which shows entire months of trading. I see something here. Look, almost every pattern has its own antagonist. It's complete opposite. In the case of a double top, that's a double bottom, and you can see it right now on our chart. I'll also highlight the neckline. It's right here, and as you can see, there were some serious battles around it. Yes, between the bears and the bulls, there were false breakouts, 3 tests, and so on. This is exactly the stage we're in right now, friends. Now I suggest we return to our working time frames. And yes, we have a second trade. It's also in profit. There's a bounce, so let's switch the currency pair. So today we're studying a chart pattern together. If anyone is already getting bored, believe me, that's normal. The topic isn't the most exciting, in fact it's rather dull, but it's incredibly important for your development as a trader. And no one ever said becoming a trader was easy. If everyone could do this, it wouldn't be such an attractive and lucrative profession. For those who are ready to grow, I invite you to join my Telegram channel. In addition to my YouTube channel, I also have a Telegram channel. And by the way, if anyone doesn't know, my name is Max, and I've been a professional trader for 6 years now. So, by subscribing to my Telegram channel, you'll receive valuable information from me, indicator-based trading strategies, their reviews, useful trading life hacks, my personal experience as a trader, and maybe some of you will be interested in how I live and what my day looks like. I talk about all of that there as well. In addition, you'll be able to take part in my projects and trade together with me in real time. The links are provided in the description of this video, and there you'll also find feedback from my partners who have already gone through their own journey with me and want to share their experiences with you. So don't be lazy, go ahead and check it out, subscribe, I'll be waiting for you, then come back and we'll continue studying graphic patterns. Okay friends, now we're trading short. Here we have an excellent pattern which is called a fan or a broadening wedge. Let's look at the chart. I simply connected the lows and highs and got this kind of megaphone shape. The price moved strictly within it. After each reversal, volatility increased and eventually this happened. There was a breakout. Then the price returned inside, but that also didn't lead to success. A repeated breakout downward finally secured the sellers, and now the asset is going to start declining. That's why I'm opening a short position. I know that many beginners are curious about where these patterns come from and why they work at all. It's all quite simple. It's the effect of self-fulfilling prophecies. People see the formation of a pattern and expect it to play out. They open trades based on the logic of the pattern, and it works out perfectly. That's all there is to it. It's all based on volume. The patterns are drawn by the market itself, because such trades are opened by buyers or sellers, that is, market participants. Another trade is in profit. I'm switching the chart. Let's go. Here, we'll also trade short. It's a similar situation, just the fan is in the opposite direction. They are often called wedges, although some would even consider this a triangle. Look, we draw two lines. And again, we see the price squeezed within a narrowing formation with a final clean breakout downward. No retests, no false breakouts. Now we have a small correction, and I expect that I entered right at the end of this correction. There's still room to fall, so we wait. By the way, here's another very interesting observation for you. I love beautiful moments on the chart. Let me highlight it for you with a line. Here's the support level that was formed, which eventually turned into resistance right here at the moment we opened the position. It's as if the market has its own logic, right? And it really does. Because we're not the only ones who see this level. Thousands of other people opened positions on the reversal near its boundary. And it made us money. I think this chart will give us another trade. Let's wait for the right moment. Although, why wait for it? Now, perfect. You can add an indicator to this, as I mentioned at the beginning of the video, so you can see the overbought and oversold levels. That's the RCI or stochastic oscillator. And that's it, friends. It's all about intuition, with experience, with feeling, with a sense of timing, and trading will bring you pleasure. Pleasure and, of course, money. Without this, nothing will work out. This is what trading mastery is all about. The trade has stalled a bit near the entry point, but we still have 25 seconds left, so maybe it will work out. I believe in it. In a trader's work, the main thing is not just being able to analyze the market correctly, but also believing in what you do. Without confidence in your actions, unfortunately, nothing will work out either. You shouldn't be overconfident, of course. Don't go against the trend, but your hands shouldn't be shaking. That's what I mean. Your hands shouldn't be shaking. Even a couple of points will be enough for us in this trade, and we have them. Excellent. Let's switch the chart and find something more interesting. All right, another fan pattern on the 3-minute time frame. Now I plan to trade its inner part. Yes, that's also a perfectly valid approach. Look, this is a long trade, and here's what we can see here together. Just like last time, I connect the lows and the highs. And I get this nice looking formation. Now we have everything we need, friends. Here is the bounce from the lower boundary of the fan, which is now leading us to its upper part. Let's wait for a positive outcome. I'm sure everything will work out for us today. The only thing is, the profit percentage isn't that big. All right, let's add a bit of criticism to what we're doing here, friends. Technical analysis, especially chart patterns, is quite a subjective thing, as I've already mentioned. Where I see a wedge, you might see a double top. That's why you need to be more careful. Patterns have the effect of self-fulfilling prophecies. But for this to really work, everyone in the market needs to see your pattern, not just you. You can take profit here, but do it carefully. So, out of all the patterns, try to choose the most obvious ones. Don't look for a pattern where there isn't one. As for me, I'm back in position, no extra commentary. We're moving to the upper part of the fan. And getting back to the topic, I'll give just one piece of advice for working with recognizable patterns. If you don't have much experience yet, use a higher time frame. We're on the 3-minute chart right now. And here, we only have short-term traders, which means a huge number of participants don't see what we see. If I move up to the hourly or daily timeframes, I'll see the picture that banks, brokers, and corporations are working with. They have much more volume and they can knock us out. The most reliable signals are always on the higher timeframes, remember that. But you can still take your profits on smaller patterns, just like I'm doing now. At the very least, because patterns still reflect the logic of price movement. And they show where the entry point is. So what now? No friends? That's the first minute lost today. It's not a problem. We'll reinvest and open another trade for $800. The overall situation in the market hasn't changed drastically. Just in case, let me remind you what we're waiting for here. We're still far from our target. We haven't even reached the first little stop right here. I think this is my last or second to last trade on this chart today. Friends, this happens. So yes, you understand that nothing works out here 100% of the time. We have indicator analysis, price action, technical analysis, and candlestick work. By the way, I recommend reading about candlestick analysis by Steve Neeson on this topic. Personally, I like to combine everything together. I also take patterns into account. But most likely, on higher time frames, I'll do technical analysis, I'll look for candlestick signals, and I'll definitely have at least a few indicators. That's my style. You might have a different one. But for me, another profit for today, minus successfully recovered. It's probably time to wrap up, but let's do one more trade together. We need to wait for the perfect moment. All right, let's go. Our fan isn't formed yet. Let's still take a look at what the big money, such as large investors, is doing. And the big money is drawing what's called a cup. This is a reversal pattern with a very slow, gradual formation. Right here, our asset has finally refreshed and stopped. And now we're already seeing signals for growth. Ideally, we might see something like this, like a handle, like a little handle. The point is that the price should eventually break through the line of the cup itself and its handle. But we won't see that yet. At least not today. Let's go back to the minimum time frame. So what? 10 seconds? All right, a small rise, friends. That will be enough for us. By the way, you can also read Jack Schwager's Technical Analysis. That's a great book too. Awesome, friends. $616 stuck. Excellent. Let's sum up. There's nothing more to say. Well, friends, I can say with full confidence that technical patterns work. They really do bring profit. I made $1,500 in an hour. I'll show you new interesting patterns on my Telegram channel, so don't forget to subscribe. And if you liked the video, be sure to hit the like button. That's it from me. See you in my next episodes. Bye, everyone.